Hi, welcome to the Trading Pen. I am Mr. Pen, aka Mr. GPY, and on this video, we are going to talk about. It is a nice and slow word. It is what? Introduction. Introduction towards market structure. In trading. Introduction to market structure in trading. I hope you guys can see this clear now. Good. So what is market structure in trading? What is market structure in trading particularly? In a theory aspect, so theory. Okay? So we say market structure is how price of an asset moves over time. Okay, it is how price of an asset move over time. Market structure is how price of an asset, how the price of an asset move over time. Yeah, the pattern it forms while moving either up, down, or sideways. That is market structure. Market structure is how price of an asset moves over time. The pattern it forms while moving either up, down, or sideways. That is market structure. The pattern it forms while moving up, down, or sideways. That is market structure. I hope you can see this clearly. I said in theory, market structure is how the price of an asset move over time. The pattern it forms while moving either up, down, or sideways. That is market structure. Just like a building have structure. If you're building, you have to do foundation, walls, and roofs. That is structure for buildings. The same happens to market. Okay, markets have structure made of price highs and lows. Just like a building has structure. Markets also have structure too. And it is made up of price highs and lows. Price highs and lows is what makes market structure. Traders use this to read what the market is doing and where it is likely going next. That is market structure. Just like a building has its own structure, market has structure too, and that is what traders use. Traders use it to read what the market is likely going to do next, is doing and likely going to do next. Okay. I hope you guys can read this so clear. This is the theory aspect. And core market structure types. Okay, we have market structure types, which is the bullish trend, bullish. You can call this, let me say, uptrend. And we also have the bearish, which is downtrend. So we have three. I hope you guys can see this. We have bullish, bearish, and we also have what we call sideways range. That is the third one. Call this range or sideways, commonly known as consolidation. I hope you guys can see this clear. Commonly known as consolidation. The uptrend, downtrend, consolidation. Now let's briefly give hints on what each means. So we have the uptrend. This is where price is making higher highs known as HH. Example of this is, imagine you are climbing a staircase. Each step is higher than the last. That's an uptrend. It's everywhere. Okay, it's everywhere. So bullish market means buyers are in control. The more the highs is going, the higher high, the more it means that buyers are in control. So let's say the bullish market means market structure. You know, we are talking about structure here. Remember that? It means what? Buyers are in control. So this links to the here. Links like it means buyers are in control. And something is also applicable to the downtrend. The downtrend is price making lower high and lower lows. So here means what? Sellers are in control. Okay. Bearish market structure. Bearish market structure. Meaning what? Means sellers are in control. Sellers are in control. You can see how applicable they are. Now let's go to the last type, which is range sideways, or you can which is commonly known as consolidation. Let's go to that. Range. Now sideways, commonly known as what? Consolidation. This is where price stuck between support and resistance. Like price is moving within a box, no clear trend. Okay, it's stuck between the support and resistance, like moving in a box, just within a box, no clear direction on where it's likely to go next. This is range. You are in the traffic and there's red. The sign means stop, and you stop. Not just only your car, but there are others that also respected that traffic. Why market structure matters. But before that, let me give you some diagrams on how to identify them. We have the first one, which is the uptrend, which means when price is going higher highs and higher lows. That is the uptrend. It means what? It started from a low, it went high, gave us higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, till it continues. Okay, it gave us first a low here, give us high, then another low. This low is higher than this. This low is higher than this. You see, this low is higher than this. So it is now, you remember what we say, higher low. Since it is higher than this, it is higher low, and this is our new high here. Now this pushes and make what? A break of structure here. It broke this high, giving us another what? High, and it's more higher than this previous high. This high is higher than this. That's what made price to give us a break of structure. Now we call this one higher high, while this one is higher low. So the price is now operating within this range and here. So this is higher high. As price still, now price pulls back, it pulls back here, but still it didn't break this previous low. It respected it. Now it gave us another what? Another high, breaking past this previous high. Now here becomes new higher low, because the low is higher than the previous low, so it's our higher low. Now why this one is our higher high? I believe you understand what I mean. So here will be our new higher low, while this one is our new higher high. That is how you do it. The same thing happens to the rest. A new low which is higher than the previous low causes higher high. With this high that causes this high, this low is higher than the previous low, higher low, and price broke this high, giving us another high. Now we call this higher high and call here break of structure. Okay, price has to break structures in order to give us another direction. That is it. The same thing happens to the bearish side, which is our downtrend. Our downtrend is where price we have high, price give us low, give us another high and a low, which is lower low, give us lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. How? Let me explain again. Price is on high. Okay, you give us a high here, this is high and this is low. Remember, this is high and this is low. Now price pulls back, but still respects this high, then reverses and give us another low here. We call this now, because price broke this low, we call this lower low, and this our new lower high. So here is our new lower high, while this is our lower low. Now price still pulls back again, but still respects this high. Instead again, it reverses and gives us another low. Breaking past this now gives us another low here, and this becomes our lower high and this becomes our lower low. So this becomes our lower high and here becomes our lower low. The same thing happens to the next one. Price still pulls back and stop because of what? Supply and demand among here. It still respects this high. Instead, it broke this and give us another low, breaking past this previous lower low. Now we still have here as our lower high and here as our lower low. The same thing happens to here. Price pulls back, gives us this high, respects this high and break past this low, giving us a lower low here and a lower high here, and still the same thing over and over and over. Okay, this is the bearish price market structure. You can call it downtrend, and here is the bullish market structure. You can call it the what? The uptrend. And let's go to the sideways. Remember, okay, sideways, we say that sideways is where price is stuck in between support and resistance. Okay, let me give an example first. This is our support, this is our resistance, the up one is our resistance, and here is our support. Here is our resistance, and here is a support. Let me label them. And here is our what? Support. So price is stuck. It's stuck high. Let me say maybe price was coming from a bullish trend. It was making higher highs and higher lows, higher highs and higher lows, higher high and higher low, higher high. Then it stopped. It started respecting this resistance multiple times after making a higher low without breaking this previous high low, this previous higher low. It still made another what? Instead of it to break this past this high, this previous higher high, it still respects the resistance again, and the same thing happens multiple times, still respecting the support, respect resistance, respect support, respect resistance, respect support, respect resistance. This is what we call, from here, from this line, this is what we call our sideways. This is what we call consolidation. Price is consolidating in between support and resistance. This is consolidation. Consolidation. You can call it range, sideways, anyone that is most easier for you to understand. The same, okay? Now the market maker, big investor, enter the market, or maybe there is news release and price decided to go out from this consolidation, and maybe I'm tired of going up. From that high, he gave us a low here. Remember, this low break past this previous low. Now breaking past this our previous low, which is here. Now it officially means what? The price have changed direction. Some will say here there will be a change of character here. Now price gives us another high here, but this high is lower than this. Now we call this a lower high. Price breaks past here, the lower low, gives us lower high, lower low, lower high, lower low. You see, that is how price and market is made. The same price, maybe there is no much demand or supply. What will happen next? Price started consolidating again. This means what? That is stuck between support and resistance. Stuck in between support and resistance. This happens every time, but not just clean like this. Not just clean. Remember what I told you. For us to know that price has already given us another higher high, it has to break structure. That is what we call break of structure. And as price broke structure here, this low, instead of going high, it turns going bearish. Instead of uptrend, now we are downtrend. It means that here is now our change of character, or what we call the ICT call market structure shift. Price have already shifted from bullish to bearish after giving us a consolidation for maybe how long it wants. That is the basics of market structure. So if you want to read, you best go with 1 hour or 15 minutes. This is the basic of market structure, and let's identify it using the real time So this my time frame is, let me go to 15 minutes. Let's use the real time. Or let me go to higher to avoid noise and everything. Okay, look at here. When we say after price, well, I'll give you the range. We identify range and bearish movement, and you can see here price is bearish, giving us what? A high here and a low here and a low here, breaking past this low, break of structure, lower low, lower high, lower low, lower high, lower low, lower high. Is the same thing over and over and over and over and over. Now to go lower time frame, you see that this right here might be a very good consolidation. Then after that, you see price broke past the consolidation, breaking past this high, giving us a what? Change of character or market structure shift. Now it started again. Here is our new low and we have our new high. You see, it is now called higher high. We have higher low, we have higher high, we have higher low, we have over here higher high, we have higher low, we have higher high. That is what we call the bullish market structure, or you can call it the uptrend, and this side we call it the downtrend or the bearish market structure. Starting from here, you see bearish market structure, and starting from here you see the bullish market structure. Now let me give you an example of the range. Let me give you an example of the range. Let's go to the much lower time frame, 15 minutes. I'm gonna find something. Let's use this. Now let's look at this. Price stuck in between support. Okay, price stuck in between support and resistance. You see, price gave us this low, give us this high, this low, give us this high, this low, still rejected inside and give us this high, this low, still rejected and give us this high. This high is what broke the consolidation, now telling us that price have changed direction from bearish now to bullish. And as you can see, from going bearish, price continue going bullish after breaking past the consolidation with this candle here. You see, that is exactly how to spot market structure. Okay, if you can do this on your own, understand? You can do this on your own. The structure is the direction, the trend. The more the structure comes, like higher highs, higher lows, or lower lows, lower high, lower low, lower high, it now forms a trend. And the trend is what? The story. The break of structure is an opening gap for new begins, a new chapter that begins. Once price makes a break of structure, it means a new chapter automatically has already begun. And that is all for market structure. Okay guys, that is all for market structure. If you like something like this, don't forget to like, share and subscribe.